Yo, what's good everybody? Welcome back to another video. So this video is going to be extremely important and we have to understand it. Well, you have to understand it as a newer trader as best as you possibly could. Now, when it comes down to top-down analysis, it is something that you're only going to get better at with time and experience trading. That is literally the only way you're going to get better at top-down analysis, with time and experience. This video may be overwhelming to the beginner trader, to maybe the more advanced trader. It may give you a lot of clarification, but like I said, again, the only way to really improve on trading is really by showing up to the markets every single day and consistently trading every single day and consistently looking to improve, right? So one thing about that we have to understand about top-down analysis, what we're doing is putting all time frames into correlation so we could find the best trading setups, the best trading probabilities, right? So let's kind of dive right into it. I want you guys to take as many notes as possible, replay this video as many times as you possibly could, just so you could pick up on things that maybe you didn't understand before. So when it comes down to top-down analysis, the very first thing that we have to ask ourselves, right, we're going to put ourselves through a process every single day. And that is, we're going to identify the market, where the market's trading, one, right? So let me kind of write this all out for you guys, right? So let me kind of move things over. I have a mess in my office. I apologize. So one, we're going to identify. Right, and what I mean by identify is we're going to identify where price is trading, what trend the market is in, and you're going to ask yourselves, what are the moving averages? So this is what I mean by identify, right? You're going to ask yourselves where price is trading. Are we trading at a level of resistance? Are we trading at a level of support? What do the previous candlesticks look like, right? So you can even add that. What does the higher time frame, we're going to add here daily through weekly, look like, right? So this is what I mean by identify, right? So what I mean by identify is where price is trading again, what trend is the market in, if the market's in any trend at all, what are the moving averages, which we'll get into moving averages later on, right? What does the higher time frames look like in terms of the candlesticks, right? So this is going to be the very first step we do when we're doing our analysis and our top-down analysis. We're going to identify what the market is doing. Then we're going to hypothesize. So let's kind of, change this up a little bit. Right, I'm going to add this as a title. We're going to identify. Let's make this bigger. Right, and then I'm going to, can I make multiple colors? No? All right, so let's italicize all of this then. Right, so we're going to identify where price is trading, identify what trend the market is in, identify what the moving averages are, if they're red over blue, if they're blue over red, right? And identify what the higher time frames look like. Then we're going to hypothesize. And what I mean by hypothesize, we're going to one, it's as simple as that. We're going to hypothesize market direction, hypothesize our targets, hypothesize stop loss. We're going to hypothesize market direction. We're going to hypothesize targets. We're going to hypothesize stop loss. And then all we're simply going to do is execute after that. Right? It's as simple as that. So this is a formula that we have to follow every single day. Now we're going to get more in depth on what we're talking about here later on throughout the course as we advance. But this is what we're going to be looking at every single day when we actually go step by step and perform our top-down analysis. This is what top-down analysis essentially is, right? First, we're identifying what the market is doing. Then we're going to hypothesize what the market is going to do. All we're simply going to do after that is manage our risk and execute. So I'm going to keep this for you guys there. This is maybe something you guys may want to write out and have on a sticky note on your monitor. But when it comes down to top-down analysis, right? For the daily, the weekly, and the 4-hour time frame, we're going to look for one, the trend. This is how you're going to start. You're going to look for the trend. Is the market in a bullish trend? Is the market in a bearish trend? Right? Along with looking for the trend, you always want to follow the higher time frame trend. Meaning that if the daily and the weekly, let's put here, if the daily and the weekly are bullish, but the 4-hour time frame is bearish, then you could take a lot of things into a certain account, right? Are we looking at a potential reversal? Could the daily structure still be valid in terms of the trend, right? There's so many things you want to take into account, but really all we're looking at is a trend. If the weekly and the daily time frame are telling you buy, then really you should only be looking for buys. Now, we can get into things later on, such as supply and demand and everything else. But what I'm going to do is pretty much perform a top-down analysis for you guys so we can continue on with the lessons and everything that we're doing here. And we can also, let's move this out of the way, perform the top-down analysis here for you guys so we can continue with our lessons. And we can also learn what top-down analysis actually is, right? So typically when you're doing top-down analysis, you want to start off on the monthly time frame and then work your way down. So when it comes down to the monthly time frame, right, what we're going to be really looking at are the candlesticks and how these candlesticks are forming, right? So when it comes down to the candlesticks, as you guys can see, right, this previous month or this current month of November is going to end in roughly 2 weeks, a little bit less than 2 weeks. What I see so far is we've broken above the previous high of the previous month, right? So again, coming down, going back to the candlesticks and wicks section, we've broken above the highs of the previous month, making new highs. Now let's take a look at the previous month's low, right? As you can see here, from comparing this low, let's go back here, comparing the previous month's low to the current month's low, right? This was October's low, this is November's low, right? As you can see, we have a higher low. Why is this a higher low? Simply because this low is higher than the previous low. Now, if we look at November's high, it's a lot higher than October's high, which is right here, right? The top of the wick. Along with that, notice how price is broken above this level of resistance here, 1830, right? You're talking about 3 months worth of resistance was now just broken, right? So there's 12 days left within the month. What I can expect is for this month to close and for the next month to keep going. Where could we keep going to? Right here where we see next level of resistance, right? 1900 is where we can expect gold to go in the short long term. Now, if we go to the weekly time frame, all we're starting to see is more detail, right? So let's mark off, let's go back to the monthly. Let's mark off October's low, October's high. And then let's mark off November's low and November's current high, right? Now, if we go to the weekly time frame, we could see that this right here is October's low. And then this over here is November's low. This right here is October's high. And then this right here is November's high. As simple as that. So what we could start to see here is a market went low, high, higher low, higher high. So we can kind of expect a pullback now. Now, you have to ask yourself, since we're at a higher high, we know we're at a higher high, where could we potentially expect a pullback to? This is where supply and demand comes into place, right? Because now, if we look at these weekly timeframes, we know that this bullish momentum is holding very, very strong, and we know we're trading at a daily level of resistance. So again, when it comes to the trend, there's multiple things you can use, such as your Fibonacci retracement tool, where we could see the 38.20% is right on the 1830 resistance level, right? And all I really did here on this weekly time frame was look at the candlesticks and looking at my previous areas of resistance and looking at how momentum is holding within this current trend, which is very strong. Now, if we go to the daily time frame, again, we're expecting price in the long term to go to 1920. So there's always going to be more desirable levels for us as traders to take trades from. Now you have to ask yourselves, okay, well, where could we potentially take a trade from, right? Or where could the trend potentially pull back to, because we know there's highs and lows and there's higher highs and higher lows within the trend. Now we're starting to see a little bit more detail. We could see that right here was October's low, because this right here, September, this is October. So October's lowest point is right here. This is going to be October's higher low. This is going to be November's higher low. This is going to be October's higher high. So let's do the following here. What we're going to do here is mark off November's low, so November made a higher low at 1760. Let's leave it at. And we're going to lock this, put okay. Make sure this is locked. November's higher low at 1760. Then this is November's higher high at 1813. And okay. Right, so now we have our higher highs and our higher lows marked off. So what we can expect for price to do is pull back potentially to this 1830 level. If this 1830 level breaks, then what we could wait for is for price to come back to November's higher high, where we can then look to take price back along up to 1870. Does that mean you can't take a trade before then? Should you only wait to buy? No. You can take counter trends for sure. Just know that when you're actually taking a counter trend, you're looking to get it in and out of the market as quickly as you possibly could, right? You don't want to be greedy with a counter trend because you know the trend can flip at you at any point in time, right? So again, now that we're trading at resistance at 1870, I have two things that I could potentially do here, right? On the weekly time frame, we know that price is currently trading at a daily level of resistance. Most likely, this week is going to close within this area up here. Why? Because all time frames have to be in sync. Price isn't just going to come all the way back down to 1830 before the weekends, because that's just going to signify that there's not a lot of buying momentum here, which that's not the case. There is a lot of buying momentum. So most likely what's going to happen is the week is going to end, and then the next week we'll see a bearish move, and then the following week we will see a bullish move. And that's how typically things play out within the market, right? If we look at the weekly here, notice how on the weekly it came up to resistance. This week closed. The following week opened up and we had a big bearish move, right? Go back to the weekly and check it out. You can see here, right here, price came up, tested resistance on the weekly, new weekly candlestick opened, price came down and then continued to actually trade lower, and you could see that on the chart right here. It's literally as simple as that. Once the next week opened up, price saw a really big move down. And that's typically what happens in the market. Again, all time frames have to be in sync when it comes down to these big moves. So that's why we haven't seen a very big move off of gold recently. Why? Because a weekly time frame has to close, and then we could see that big move down to 1830, which is like 300 pips, which again, you can still capitalize off that big move down because we're trading within a range here right now. Between 1870 and 1830 is where we're looking for our range. Now what could happen is that this weekly could go up and close as a doji, or maybe even a small bullish candlestick, and then the next week continue to trade lower. But again, what we're doing here with time frame correlation and top-down analysis is we're simply looking at the direction and where price could head on the higher time frames, always keeping that in mind and basing trades around those higher time frames. It's a lot simpler than it sounds, but that's the reality of top-down analysis and how you should approach top-down analysis, right? So that was just kind of an intro to top-down analysis. When it comes down to the webinars and when it comes down to everything else, just ask me questions if you ever have a question on top-down analysis. But again, you want to start off on the monthly. Really, the monthly you only want to look at maybe once or twice a week, and then on the weekly time frame, the daily time frame, the 4 hour time frame, you can work your way down. So again, if the weekly and the daily are telling you bullish, just know that the overall trend is bullish. Then on the 4 hour time frame is where you're going to be looking for market direction, so you could take a trade off of. If you know that on the daily time frame you're trading at a daily level of resistance, on the 4 hour time frame you want to look for market reversal patterns such as your double tops, your double bottoms, your head and shoulders, where you could look to potentially take a trade to the next level of support, where you may see another higher low or higher or lower high form, whatever the case might be, depending on the trend. But that's just like a quick breakdown of what top-down analysis actually is and how you should perform top-down analysis. Because again, what we did was we marked off the month's higher highs and higher lows, and we've identified that we're trending bullish here on gold. Then you could go on the 4 hour time frame and identify where price is trading, and you can even mark off your 4 hour levels here as well. But as you can see, it's kind of just one steep move, so there is no real level, right? We know that there's a higher high right here, there's a higher low right here, there's a higher high here, and that's currently what we're trading at. We know that we're trading at a higher high. It's a lot simpler than it sounds, but that's what you want to do. You want to mark off the month's higher high, the month's higher low, or if the trend is bearish, the month's lower low, the month's lower high. If the trend is consolidating, you want to mark off the month's high and the month's low. Then you can even go so on and so forth as marking the day's higher high, the day's higher low. But that's more of like an intraday perspective, where once you know where you are in the trend, all you're simply doing is marking off your higher highs and your higher lows and looking for trade opportunities based off of the trend. That's how you do top-down analysis. I'm going to be doing more of these videos throughout the course. We're going to be doing a lot of confluence videos and then actually looking on where we could take trading setups. But anyways, again, don't forget this process that we just went over right here. So again, you want to identify the trend, but you also want to go through the process of identify, hypothesize, and execute, IEM, right? So anyways, I will talk to everybody in the next few videos.